Will the markets finish the year with a bang, or will all the tough tariff talk and government austerity grind this bull run into a halt? Let's ask FedWatch Advisors founder and chief investment officer Ben Emons. Ben, great to have you with us. Consensus seems to be that the market levitates higher into year-end. Do you fall in with consensus?
I think I do, Melissa, because as you were talking earlier, the retail sector seems to be really good shape. And I noticed from conference board data yesterday that the intentions to buy all these consumer goods, it's actually increasing, except for autos, but mostly consumers seem to be upbeat. You may think that maybe the tariffs may be playing somewhat of a role in the consumer mind, maybe by now that they're anticipating tariffs and they start pulling forward their purchases. Either way, it sets itself up for this holiday season not to lose any strength. So near term, I say, yes, you're likely going to break 6,000 on the S&P. You were saying Bitcoin just hovering above 100,000. That seems to be a level to be broken. And it's the only exception here is the 10-year yield, right, which is pulled back, maybe on the best in news. But I do think we're going to go back to 4.5, simply because this is a good economy. There's no derailment yet from anything of the tariffs and otherwise being announced. If anything, it continues to be positively anticipated. So it seems to have more room to run into year-end.
What's the time frame for 4.5, and can markets move higher still? With the 10-year going to 4.5. I mean, granted, it is a place we have seen before, but will that provide any resistance to stocks going higher?
None of it is for the good reason. And I think what we had as data today were actually really good reasons for this 10-year to move a little higher. Though inflation is somewhat moderated, but inside of all these reports, it shows that we have an economy that's driven by strength and services. So I do think this 10-year, and there's actually the PC core services was up again, that partly is the reason why the 10-year would lift, because this Fed is in sort of a current situation of risk management where it likely will not cut rates as we discussed it previously, and has this reason because inflation is stickier. So, but it doesn't derail the stock market because it's for a good reason, right? Yields going up partly because of growth being strong and services being strong. So I think we can reach that 4.5 without getting volatility in markets.
Yeah, Ben, 2025 is going to be the year of debt issuances. I don't think the market's talking enough about it. Can you speak to that? Because I think 4.5% is right. I think it'd actually go a lot higher than that.
Yeah, I'm with you on that, Guy, because, we've always had this view before, right? It's actually not 4.5. It could be back to over 5%, because if you think of this issuance that we're facing next year, as much as you want to target 3% of the deficit, you're going to have to do a lot of cutting of spending to do that, which is not that straightforward. Yet you got to finance this big deficit. And as we now heard Bassett through the lines, if you followed him, he does look to increase the term of issuance, as in more maturity, longer maturity issuance. And that, I think, is still the pressure point for the Treasury market. It's not in the curve, it's not in the term premium that we're going to get more long maturity bond issuance. So I think on that point, Guy, you're probably going to drift higher towards 5% just on that basis, in addition to, as the economy stands up and keeps staying resilient.
Ben, it's Karen. Thanks for being on. So if the economy is resilient, where do you think the Fed does on the short end of the curve in the next 3 or 6 months?
I think they stay on hold at least in December, Karen. But, if you read these minutes correctly, then they're kind of cautious, deliberately cautious, they say, which I think is really about they're just going to continue to analyze this data, make their assessment. They're going to keep that option open to cut rates, but I do think they've moved away from cutting rates really fast. And one important point there is that Goolsbee and a couple of others have now come out that they think they're closer to neutral now than they thought before. And that's important because if you are, then, you cannot cut much more, right? So I think the Fed will probably be on hold in December and may choose in the first quarter one rate cut and then maybe stay on hold for a bit.